created this example to demonstrate how to enter into the ledger entry, which is we call it T account, and the journal writing, the debit credit, when there is a bad debt happens, when there is an irrecoverable debt happens. Okay, so for example 1, when bad debt happens, 1st January 2023, trade receivable Mary, I simply give her names. So 10,000 balance PD means that this is the amount that's supposed to be paid by Mary when they is due. So, but Mary didn't pay a single cent. Maybe uncontactable, maybe declare bankruptcy. So 10 January 2023 is confirmed that we are pretty sure that there is a bad debt happens for the whole amount owing of 10,000. So we need to record in the accounts, Mary account, carry out as a bad debt. Why do we need to do this entry? Because if we did not do that, we will keep on balance BD and CD for the 10,000 as the amount owing still by the Mary. And this 10,000 will included under our current asset, and as well as we didn't declare the bad debt losses into our income statement. At that current year, we still thought that the profit earning and the money already received, or there is still amount owing from by the Mary trade receivable. So means that you are overstated your profit, at the same time you overstated your current asset. Okay, next. So we look at the T account below. Mary accounts, balance BD as usual. When there is an amount owing by someone, we should debit plus and credit minus. But debit plus means that asset increase, and credit minus means that I reduce the amount owing by Mary when they pay us. Okay, so balance PD 10,000 show here under debit side means that Mary still owe me 10,000. And if there is a bad debt, I need to cancel this amount by credit it under bad debts in details. So I credit Mary 10,000 and then look down the bad debts account, debit bad debts as the bad debts happens. Bad debts increase will be debit side because bad debt is EXP. Remember, asset expenses increases under debit plus. If income increase, credit plus and debit minus. Okay, so credit out to the income statement to declare the losses as expenses. So debit side in your income statement, financial statement, means that indicates expenses happen. Credit will be income. So double entry done? Yes, you are not only single entry, you are double entry. So everything will be balanced at the end of the day. So journal, how to show? Debit my bad debt 10,000 because bad debt happened. And credit Mary account because reduce the amount owing and declare as a bad debt. I bear the losses. Step 1 and step 2, I already put the red color numbers there. You just follow the numbers. And debit income statement as the expenses and credit. Bad debt I take out from the bad debts account, balance it down, balance it up, and then move to the income statement. Okay, what if the bad debt's already done, right? Let's say 1 year ago declared as a bad debt, and 1 year later this bad debt suddenly this Mary come back to me saying that I want to pay what I still owe you. Previously I was having a financial problem, so I moved to another state and now I want to pay you back. So you thought that you cannot get back the money, so that's why you close Mary account as a bad debt account. And now I need to reinstate back. So when there is a debt recovery that previously you already closed as a bad debt, and now you have two methods to record back to the amount owing. Okay, first step we call it, we just add or create the debt recovery account only. I do not need to reinstate the amount previously amount owing into your Mary account anymore. I don't touch whatever I already closed, whatever I make it as zero. Method 1. So means that method 1 is easier actually. And method 2, I need to reinstate the previous account, Mary account, add back to the debit side as still owe me the 10,000 and credit up as a bank money received. So but for the details, you for more details actually is method 2. So your boss can see, oh, they know which account recover, which account that previously already bad debts and now recovery. But method 1 you might not see. Okay, now we explain the method 1. Use back the previous example and add on. However, Mary paid 10,000 by check after a year, 10 January 2024, exactly 1 year. So in this situation, I created, first step, created the debt recover accounts. Second step, I need to enter the money received into my cash book. I receive money, debit my cash book, credit my debt recovery. But debt recovery need to close the account by debit your income statement, credit into your income, debit your debt recovery, credit your income statement as other income, because I did not expect I will receive this. Last year I declared as expenses. Now I need to claim back as a income, suddenly income, suddenly a benefit. Okay, so you can read the journal here. Debit my bank because of money I received, step 1. And step 2, credit my debt recover account. The debit credit in the debt recovery account do not have plus and minus because they are existing is just for the double entry purpose. Because I debit my bank account, I receive money. But where do I credit? I need to balance my account, otherwise my trial balance at the end of the year cannot balance. And cannot balance, then I cannot balance my SOIP. Okay, so you have to read through the journal. Okay, under the method 2 is to reinstate my recover amount as the amount owing in my trade receivable, TR as trade receivable. And number 3, first still create the debt recovery account because you need to fit in the double entry purpose. So second step is to reinstate the amount that I already declared as a bad debt, right, last year. So now I add back into the debit side as the money, still money owing to Mary account. And then credit my Mary account 10,000 and stated in detail that I received check as a bank. So I go to the bank account. Can you see the nominal ledger there? So my bank account will show 10,000 increase in the debit side, and the detail will show as who gave me this 10,000. Mary gave me 10,000. Okay, and later my debt recovery account, I shall debit out and credit in to my income statement as the money received, other income. Okay, the journal will be debit Mary, credit debt recover, step 1, step 2, and then step 3, step 4 is the money received. Money received from who? Mary. Step by step, first step is to add back the money amount owing to the Mary account. Second step is money received. Third step is the debt recover. Explain why there is a sudden other income because of the debt recover.